Hi, my name is Mylan Rogers with Vision Properties. And today I wanted to talk to you about a subject that comes up quite a bit with homeowners that I work with that are dealing with a possible foreclosure. And that is the foreclosure deficiency. I created this presentation to kind of give you some more information about kind of what are the bank's options on dealing with that deficiency with the homeowner. So I named this foreclosure deficiency. What is going to happen to me? A discussion about what the bank can do when you owe them a deficiency. Um, just a little bit about Vision Properties. We're a Utah-based company. I'm one of the owners, and we've been in business for about 5 years. We're accredited with the Better Business Bureau, and our expertise is in short sales and bank negotiations, and we're focused on helping homeowners avoid a foreclosure. And it's what we're passionate about. It's what we love to do, and we're very good at it. Enough about us. So let's move on to the meat of it here. Let's talk about the deficiency first. The deficiency is the difference between the amount the bank receives as final payment on your distressed property and the amount you borrowed from them originally. Let's use an example. Let's say you borrowed $200,000 to buy a house, and in the end, after either an auction or a short sale or whatever, you the bank only gets back $150,000. So there is actually a deficiency there of $50,000. That's the deficiency that we're talking about. And so the bank has different options on what they're going to do with that deficiency. Okay. So, but what some of the scenarios that you might see are where you get a deficiency is, a foreclosure auction, which that should be self-explanatory, right? The deed in lieu of foreclosure is basically where it skips the foreclosure auction, but all you're doing is voluntarily signing over the deed to the bank, and so you're kind of skipping the foreclosure auction, but it still considers as bad because the bank is taking over the property and they have to liquidate it. So there is going to still be a deficiency there. The third thing is a short sale, and a short sale is nothing more than the bank, uh, your lender agreeing to let you sell the property for less than what you owe them. Okay, and that's really all that is. Okay, so what are the bank's options for dealing with a deficiency? There's about four different things that banks may do, and I listed them from best to worst from the standpoint of you as the homeowner. So the best option is for the bank to walk away, and they do nothing, and they just do nothing. But that is actually happens quite a bit in a short sale situation. Um, and so that does happen. The another thing that's really common is that the banks will just send you a 1099-C cancellation of debt. Basically, they're passing on the tax burden of that deficiency to you, okay? Because they say, hey, we gave you the money, we never got it back, you should pay the taxes on it. And then there's a reaffirmation of the debt. This is essentially where you sign a promissory note for that deficiency amount. It becomes an unsecured debt at that point, but it helps them in their collection efforts after everything is done with the property. Okay, and then the final one is the worst case scenario, which is a deficiency judgment. It's essentially they go to the courts and file a judgment against you for that deficiency, and then they try to they garnish wages and all those other kind of things. So let's just talk quickly about what are some of the remedies around these different options that the banks have. Okay, so a remedy for you with a walkaway is nothing. You don't have to do anything. Actually, the bank just writes it off and goes away. The 1099-C is actually not a bad thing either, especially if it's your primary residence, because there was a law passed last year that allows for you, if it's your primary residence, to not be taxed for that 1099-C. I'll talk a little bit more at the end of this presentation about that and give you more specific information, okay? The reaffirmation of the debt, essentially, if that promissory note is signed by you, if the bank requires you to do that for either the short sale or something, then at that point, it becomes an unsecured debt like a credit card. So just as with any other unsecured debt, generally speaking, you can negotiate a settlement for a fraction of that amount. So it's still negotiable, and you can settle for much less than what you owe on that deficiency. The deficiency judgment, generally speaking, you either have to pay it all back or file a bankruptcy. Now, the question you should ask yourself is, can I affect the outcomes? And my answer to you is yes. I mean, your decisions that you do right now about how you handle this foreclosure problem may impact how the bank responds later. Case in point is we envision properties here. We have never seen a homeowner that we've worked with and completed a short sale successfully that them go and the bank go back to them and file a deficiency judgment. We've just never seen that happen. Now, it's more common to see a deficiency judgment. We have seen that happen with banks that are that take the all the way to auction. Now, like if you walk away from the property without trying to come up with another way of fixing the issue, like either a deed in lieu of foreclosure or just letting it go to auction, there's a chance that they will come after you. There's even a higher chance if it's a small local bank or a small credit union that's local. Obviously, there's no guarantees. I mean, the bank holds all the cards. They make all the decisions. And the bank itself is actually beholden to the investors that have backed those loans. And if mortgage insurance is involved, they're also decision makers in the whole process as well. So just keep that in mind. Okay, so your best options obviously would be to bring the loan current or to sell the property. Obviously, if you have to have money to bring the loan current and you have to have equity to sell it. Also, loan modification is a great approach too in theory, but as you may be aware, a lot of these loan modifications are not going through. They're having a lot of issues with that, and those loan modifications a lot of times aren't permanent. So in concept, it's a great remedy, a great option, but it's not. A lot of time, it's not feasible, especially if you have issues with income and so forth. Refinancing, again, is a great option, but it requires equity in the home. And I put short sale on here because even though it's the only one on this list that creates a deficiency that the bank recognizes, it's still a pretty good remedy because generally speaking, one of two things are going to happen with that deficiency. One, they're going to walk away, or two, they're going to send you a 1099. On rare occasions, we will see them require the homeowner to sign a promissory note. And in our case, we usually help the homeowner by, if they do that, to negotiate a settlement. Okay. The worst options are foreclosure auction, deed in lieu of foreclosure, and like I said, the bank is more likely to pursue a deficiency judgment in those cases. The good news is for especially for people in Utah is that there's a 90-day statute of limitation for deficiency judgments. What I mean is, if they haven't filed a judgment against you within the first 90 days after the property's been either gone to auction or purchased in a short sale or what have you, they've missed their window. Okay. Now, I was talking to you earlier about that 1099-C and that there was a law passed. This is the law, Emergency Economic Stabilization Act of 2008. And essentially what that means is if it's your primary residence and the money you borrowed was used to purchase the property or to improve the property, then all you do is when you get that 1099-C in the mail, you fill out Form 982 and submit that with your taxes, and it does not become taxable for you. So that's a great remedy to deal with that situation. If it's not your primary residence, then you'll need to talk to your accountant about how to write that off as a loss for a business loss or an investment loss. Okay, and usually you can negotiate the deficiency terms. For example, in Vision Properties, when we submit a short sale offer, we also in that offer letter state that basically the seller's only willing to sell the property to us if you, the bank, consider our offer as payment in full. Okay, so you can negotiate those deficiency terms. Whoever you work with, make sure that they do that. Now, if you'd like to know more about foreclosure in Utah, you can go to the website on the bottom of the screen, or give us a call, and be happy to answer your questions or help you out in any way we can. Again, we're based out of Utah. Most of our business is here, but we'd be happy to answer your questions. Thanks, and we'll see you on the other side.